And joining me for a closer look at what's playing out on the market scene at midday is Cremen from Aviceworx. Caroline, thanks so much for your time this afternoon. So President Donald Trump still moving markets, of course, and this time around he's targeted Fed Chair Jerome Powell. There's talk of Powell being fired before his term ends, and that, of course, has been fueling market volatility since about Thursday. We are seeing some of that taper off. But how concerned are you about this move, considering that the Fed's independence comes into question?
Yeah, it is concerning. It's the same thing. South Africans will be familiar, when the EFS talks about our Reserve Bank, how nervous people get, how nervous markets get. This is a similar attack. So it's never a good thing from a political point of view. From what you can do, I'm a little bit less nervous because it's going to be difficult to remove Powell before May next year. But then you've got to consider it's May 2026, not far from now. So, he is going to be removed, and there is going to be a Trump appointee in a year, and that's going to cause issues. But I think in the meantime, it probably, I think Donald Trump sees it two ways. Number one, he wants to kind of get rid of the guys who've got low interest rates. Donald Trump is a real estate man, so he wants lower interest rates. But then on the other hand, if things go pear-shaped because of the tariffs and all of the uncertainty in the markets, Jerome Powell's a lovely guy to blame, So I think, what the concern would be is if Jerome Powell just walks away between now and May. And he may do that, if he feels that maybe his reputation is going to be absolutely destroyed by a political campaign. And I think there's the worry.
And it's that same uncertainty, Caroline, that's been, or that sparked a flight out of the US dollar. That currency fell to its lowest level in 3 years yesterday. What have you made of the dollar's performance so far this year? I mean, we all know that tariffs are supposed to boost the dollar, but that hasn't been the case. And we've also then seen, the dollar's safe haven appeal also coming into question.
Yes, I think in economic theory, tariffs should boost a currency, but you've got to look at the dollar where it was and where it is now. So where it was, it has been very high for a couple of years. So probably above its mean where it should be. So you're seeing more of a return to mean. That is the one thing. The other thing is that Donald Trump would probably like a lower dollar. For a number of different reasons. It also makes American products more, a little bit more competitive. And then the flight out of safe haven, it's something that has been happening very gradually through the years. It's just probably accelerated by about 5 years, but yet, it's the dollar and treasury still look like the more well-behaved child on the playground. As far as do you really want to put all your monies into the renminbi? You probably still pick the dollar if you had a choice.
And the weaker dollar, of course, working in our benefit. And another safe haven working in our benefit is gold, continuing to rally and hitting another record high amid the uncertainty. It really seems like there's no stopping the yellow metal, and that, of course, fueling our gold counters and the resources 10 complex. Is there stopping this rally, Caroline?
No, I don't think so. Markets dislike uncertainty. We haven't really seen a great correlation between gold and uncertainty and gold and inflation up until this point, because now it's serious uncertainty. There's no predicting which way we're going to go. And, and I also think there's a lot of the buying is actually coming from the Far East as well. So maybe there's a bit of a political element there. But, people just saying, oh, it's a little bit too risky. But I also think there's a bit of speculation there as well. So be careful if you're going to rush in at $3,500 to an ounce.
Before I get to you, our stock pick clips, Caroline, earnings season is heating up on the global front. Just walk me through some of your expectations here. I mean, we look at some of the companies that have come out with results over the past week, and it's interesting to see what the outlooks look like. Some are pulling back on their forecasts, some are making 2 or 3 forecasts, and some just quiet and not knowing which direction to go into, considering the kind of uncertainty we are seeing.
Well, I think you've got to be very cautious if you're a CEO or a CFO of a company and coming out with a broad prediction. So what we've seen up until now is people's predictions have been very broad. They're saying there's uncertainty. They're saying first of all, we don't know if tariffs are going to be there or not, and to what extent. We've got about 90 days. I think it's now about 75 days till that little reprieve goes through. So it's absolutely impossible. I really do feel for a lot of those corporates, to actually make any predictions whatsoever. So they're making very, very broad, but what they are saying is tariffs will hurt, but to what extent they don't know. And I think it's, people in the market really like to see more clarity, but they're just not able to give that at this point. But what they are trying to do is reassure their shareholders. And they're reassuring their shareholders, saying, we'll cut costs. A lot of companies moving some production to the US to modify Donald Trump. So hopefully the impact of tariffs will be a bit less. But overall, I'm not expecting any predictions. I'm going to be a brave person who's going to stand up to Donald Trump and criticize.
Yeah.
Or predict.
All right, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
Abbott Laboratories, they're an American-listed health company. They're not so much into pharmaceuticals as in medical devices, which I'm interested in because of the prospective benefit they can get from AI in the products that they are developing. And they are known for developing this type of thing. They've got about 25 products in their pipeline. That's also where their future growth is going to come from. Whether it be in cardio or blood testing. They haven't cut their dividend more than 25 years. So again, as I always say, a company like that know what they're doing. Results out yesterday, it was better than expected. This market, they're sitting on a 16 historic price earnings. I think that's cheap. So it's a growth company with a lot of runway, if I can use that cliche ahead, because of the products that they are developing. And I think a decent buy in a defensive sector in current market circumstances.
I'm looking at Microsoft. I think in an environment where there is volatility, which is often an opportunity, I think these stocks have pulled back, and Microsoft has also pulled back. I think what is attractive about it, their business model is defensive. We all use their products in the business, and they've got a few areas where they could still extract growth. One is pricing power. Two is their AI product. I mean, I don't think they are anywhere close to ChatGPT or Grok, but I think as they evolve, they will be able to extract value out of that. So I'm more positive about it against the backdrop of a volatile market.
So Abbott Laboratories and Microsoft, just your views on those counters?
So two very, very nice picks. Microsoft is down 10% for the year and 15% for the year to date. Just a reminder that is still actually on quite a high PE of about 27, but I don't think you're going to get this much cheaper. It is the bluest chip of the blue chips. So if you want to acquire that, a nice opportunity to do that. Abbott Labs, I think, is actually very, very interesting and quite a nice pick. It's actually one of those things that's up year to date. It's up 14%, it's up 21% for the whole year. It's not cheap. It's on a PE of about 25. And this is one of those, we call them companion therapies to the companies that are getting all the glory. Novo and Eli on the obesity monitoring drugs. So this is glucose monitoring and adult nutrition. You can't just have those obesity drugs in isolation. You do need these companion therapies. So an interesting and potentially less volatile way to actually play that theme, which is only going to get bigger and bigger in the coming years.
And talking about less volatility, Rickers did say that they haven't cut their dividend in 25 years. So you are guaranteed returns on that front. But Abbott Lab and Microsoft, not your stock picks. What are you hanging your hat on today?
Well, it's related to Abbott Labs. So it's one of those other drugs. It's Novo Nordisk. So it obviously has GLP drugs. And the fortunes with Novo and Eli Lilly, they don't usually run together. So at the moment, Eli is on the ascent and Novo is a bit on the back foot, especially as Eli is the US company. Today, Novo has slipped. I think it slipped about 8%. And the reason it slipped is because Eli Lilly came to the market and actually said, look, their phase 3 FDA testing of their pill of the obesity drugs has been successful. And obviously the pill is really the golden bullet for both of these companies. People really don't like injectables. That said, Eli Lilly was testing. It wasn't actually coming to the market yet. They probably are a little bit ahead of Novo, but there is room for both of those companies. This is a massive industry. Year to date, Novo is down 32%, and over a one-year basis, it's down 50%. Its PE is about 20, so it's really, really cheap at this point. And this is where you kind of need to look through the haze and look forward and say, you know, these drugs are, you know, they're going to become more and more prominent as the years go by, and it is a nice opportunity to buy now.
All right, Caroline, thanks so much for your time and just sharing your insights of trade at midday. That was Caroline Cremen from Aviceworx.